I will be explaining ERP-next accounting model using Nestle as an example to explain how a company manages its money, tracks sales and cost, and checks its financial performance. Accounting acts as a company's central financial tool. It keeps track of every single money spent on making the product and every rupee earned by selling the product. Here in case of Nestle, KitKat bars to customers. Before we go into accounting, let's see how we set up a company. I've already set up Nestle as our company, but here are the basic details to be added like currency, country, date details, and if it is a subsidiary of a company, we can add those details too. We can also set up multiple companies as per our requirement. Just like in case of Nestle, there may be something related to drinks a different company, food a different company. Let's set up our accounts for Nestle to closing their Nestle's books at local financial year. Starting from chart of accounts. Here in the account setup, the chart of accounts is shown. Chart of accounts records all accounts related to business activities or financial operation of the company. Chart of account in ERP Next can be seen like a tree-like structure, which has five main roots. These roots are asset, what a company owns, machines, factory units. Liabilities, what a company has to pay. Equity, basically owns investment. Income, money earned by selling KitKat or Maggi. Expenses, money spent on making KitKat bars and Maggi. We can add accounts under this chart of accounts as per our requirement. Here I am showing an example of adding an account to showcase our electricity bill. Electricity bill, currency. Mhm. And I have created electricity expenses under indirect expenses. We can also input chart of accounts if there is for account. Chart of cost enter is used to categorize our departments or branches or projects in accounting. It helps in tracking, it makes tracking much more easier because we add, so for example, there is marketing expenses. If we add marketing expenses for each individual location in chart of accounts, it will make more difficult to keep track of it. Rather than that, we can create a marketing cost, marketing department in chart of accounts and, and use this to track our transactions related to marketing in chart of accounts or in financials or in financial accounts. Let's see how we make adjustments or journal entry in accounting. Journal entry is used for showing occurred transaction where actual money doesn't changes hands instantaneously or at that moment. Sometimes we need to make quick updates in our system in the accounting, like putting initial money in the business or adjusting an unpaid electricity bill. Here we use journal entry. I will be showing an example of journal entry where we move money from the owner's fund to the company's account. In the journal entry, I add details regarding our transaction, like which account format is crediting or debiting, for which company it is opening. Suppose that we are changing from the here in case of our example, we are moving money from the owner's fund to company fund. So let's let our Nestle Group fund and When date is when posting date is when the transaction is going to occur. That's a random date. The amount of money is has been credited by transfer fund to the fund. Company's own account. The amount of money is debited. So it automatically adds the amount of money because in case of like accounting, we follow a strict rule where every entry must show where the money comes and where the money goes. Basically, total amount of credit should always be equal to total amount of debit. Here we save our transaction. This is generated. Now moving on to payments. In payment entry, we record transaction of payments where we buy or sell our goods. Here in this case, the actual money, actual exchange of money. Uh, we generally make payment entry when there is a sales invoice or purchase invoice. Sales invoices generated, for example, Nestle sends a box of Flipkart to a store. They create an invoice. We use that sales invoice to create a payment entry. Payment entry basically auto fetches details from the required details from the sales invoice. It fetches the customer, mode of payment, the amount. It auto fetches the details from the sales invoice. Similarly, in case of purchase invoice is generated when suppose we required cocoa beans for creating chocolates or Kit bars. A supplier delivers cocoa beans. We create an invoice to show that they have delivered the products and we have to pay them. Here we generate a payment entry by auto fetching details from the purchase invoice to show the amount of we need to pay them when on the date we need to pay and their details about the supplier. We can also manually add our details from payment entry to know about the financial health or status of the company. We use financial reports like PL statement or balance sheet. PL statement showcases is the profit and loss, basically subtracting expenses from our total income. Basically, it's showing like how much money we spent on making the Kit Kats and how much you earn by selling those Kit Kats. Where, whereas balance sheet shows what the company owns, its assets, and what it owes and its equity. It it tends to balance out its assets with liabilities and equities. Basically, assets equal to liabilities plus equities. Closing the financial book for the fiscal year. Basically, period closing version. At the end of a year or a quarter, we close our Nestle closes or our company closes its accounting year to balance out its PL statement and start a new record for a next quarter or next financial year. In the accounting setup, there's period closing voucher. In period closing voucher, if it is a quarter, we or official year, we set up our dates and showcase the year and create it. The net profit loss of the year gets safely moved into the balance sheet, and we begin the next financial year or next quarter with clean profit loss statement to track our new sales and new orders we will do for the product. Then our accounting model.